Let's quickly look at US30 Dow Jones. Let's check if we can see a setup for today. It is the 30th of July 2026. So if you are watching, just know that this is an analysis, a setup for the date that I've just given, 30 July 2026. And I hope you learn one or two things from this analysis. Okay, right now we are on the daily time frame. And as you can see, the market has been creating higher highs, higher lows, higher highs, higher lows, higher high, higher lows, higher high. And now it looks like there is a break of structure. And it looks like, I didn't say it is, but you must take note of that. It looks like there is a break of structure and the market is consolidating. So when we zoom in, or is it zooming out, I don't know, but yeah, when I do like my screen like this, making the candlestick big, and you focus on this last leg of the daily time frame. Okay, let me just make the candlestick small. Look at what is happening from here. Okay, how the market has been moving. It looks like it is on a downtrend. It is on a downtrend because we have a higher high, a lower high here. We have a lower, high, a lower low, lower high. We have a lower low, a lower high. Okay. Then when the market was supposed to create a lower low, it failed. Okay. Now the market is pushing towards the upside. This candlestick is pushing towards the upside. So meaning that we need to mark right now so that we can see where the market is heading to. Let's just mark our high here and we mark the low of the previous candlestick. Okay, because they act as resistance and support. And you can see that even here there was a rejection around this area that I've just indicated. Okay, even if I can just do like this, maybe you'll see clearly what I'm talking about. You can see that we are having a support level here. This is a support level and a verified one. Why? Because we have the first touch, second touch, and the third touch. And we've noticed that when market taps here, it goes up. The market taps here, it goes up. Right now, it has tapped the support area. We're expecting the market to push up. Okay. Since we've established that on the daily, let's move to the 4-hour time frame. Okay, let me just remove this because I've already see where the market is heading to. Okay. On the 4-hour time frame, you can see clearly how the market has been playing around this support area. Okay, as I've indicated on the daily, that when market comes here, pushes to the upside, came again, pushes to the upside, and right now it touched, and we see a push to the upside. We don't know for how long, but the smaller time frames will tell us. Okay, let's switch now to the 1 hour because the 4-hour doesn't have that much info for us. Okay, let's just now focus on this part right here on the 1 hour time frame. I see a nice setup here. Why? Because we have a double bottom that doesn't have equal highs. A double bottom that doesn't have equal highs. This kind of a double bottom, guys, this kind of a double bottom is the one that pays most of the time. It's what I've noticed. When you come across a double bottom, yeah, let me just show you something. I will draw a rough sketch so that you learn something from this. Whenever you see a double bottom that has equal lows, yeah, like this one, a W shape, you know this is a reversal pattern for a buy, né? And most of the time we buy around here. When there's a breakout, we buy, expect the market to continue moving to the upside. But what I've noticed is that with this kind of a double bottom, which has equal lows, when you buy here, price normally comes down to take you out before it moves towards the right direction. Why? It's because this kind of a double bottom, there is a lot of liquidity that is sitting around here. So you know the market needs fuel for it to move. So it comes down to collect all those who have bought, take them out, collect liquidity so that it continues to move to the upside. So you must be very careful. Never trade this kind of a double bottom up until there is a sweep of liquidity. Okay, please take note of that. This kind of a double bottom whereby it doesn't have equal highs, a double bottom or a double top that doesn't have equal highs, you identify it by if it's a double bottom, it will have a lower low and a lower low. If it's a double top, it will have a lower high and a lower high, or it will have a higher high and a higher high. It is still a double top or a double bottom. So right now, let's go back to the chart because it's what I wanted to show you. It's right here on the chart. You can see here we are having a lower low because here we also have a lower low. The market was in a downtrend from this leg. This is a lower low, this is a lower high. This is a lower low, this is a lower high. Okay, so we're having a lower low, but now here the market it didn't go down to take this lower low, but it just turned from this area and it went up and it broke this lower low, meaning there's a change of character, there's change of structure, change in state of delivery here. Okay, which makes this now a higher low. It makes this one a higher low, and this one a higher high. So as I've said, a double bottom that doesn't have equal highs consists of a lower low and a lower high, or a lower low and a lower low and a lower low. Okay, as I've said, guys, a double bottom that doesn't have equal highs consists of a lower low and a higher low, or it will have a lower low and a lower low. Unfortunately here, or fortunately here, we have this kind of a double bottom. It consists of a lower low and a lower and a higher low. And already you can see that now the market is broke out of this neckline. Let me just use that way because you guys know that double bottoms and triple tops, they have a neckline. So it has broken out of the neckline now, meaning it is ready to push towards the upside. Let's move to the 15-minute time frame. You can see on the 15-minute time frame we are retesting the neckline. Okay, we are now retesting the neckline, meaning it is ready for us to buy. This one is ready, you can execute immediately depending when you are watching the time you're watching this video. Okay, then we are going to target this high as our first TP and this high as our second TP. Then your stop loss, just place it below the lower low. place it below here, okay, to be safe. So which is what I did right now. Okay, this is our setup. Signing out.